Welcome to the Anchor Your Retirement podcast. I'm your host, Barbara Gullen, hanging out with my buddy and pal up in Minneapolis, Tony Shore. How you doing, Tony?
I am doing great. Barb, I have to tell you though, really quick before you jump in,
Sure.
you're the host, but I do want to say, do you know who Michael Strahan is? The
I
former,
do know who
and,
Michael Strahan
and
is.
he's a great. He's great. He's funny. He's on the sports
Needs
shows.
braces.
See, I'm the Michael Strahan of financial radio. That's I just for the people who watch our video, I have this big gap. I've had it my whole life, and it's Michael Strahan level, my gap. It's not quite as big, but it's almost as big as Michael Strahan's.
I had one
Um,
of those that my parents paid good money to have fixed.
I wish my parents had paid good money to have it fixed. Yeah, I really do. Dad, do we need that extra snowmobile or you need a new truck more than need to get this? I want a t-shirt, Barb, that says, over in Europe, in their subways or the underground, they have these signs that say mind the gap. You've seen that
Mhm.
logo, mind the
Yes.
gap, to
Yes.
watch out for the gap between the trains.
Mhm.
I want a shirt that says mind the gap in that font, but an arrow that just points up. Or a picture of my smile, mind the gap.
You should sell it on Etsy.
Yeah, mind the gap, and it's just my smile.
Hey,
Um, but I am the Michael Strahan of financial radio.
now,
Let's
I
just
have been smiling a lot because I have been watching the World Baseball Classic when I haven't been
yes,
running classes or working with clients.
I've seen a
So
couple of the games.
they have been
Interesting.
so much fun to watch.
Yeah, some great players, I'll tell you that.
Yes, yes. I mean, Bobby Witt Jr. is just a walking highlight reel.
Well, yeah, yeah. I mean,
Even when
there's
Italy beat the United States, but
which was a surprise.
They had Vinny Pasquantino and Jack Caglione. It's not really that
Well,
much of a
that's true. I
surprise.
guess. I guess. But the U.S. if the U.S. should always win in baseball, in my
I
opinion.
tend to agree with you on that.
It's just
Now,
like Norway always wins and usually wins in cross country
yes.
skiing
And
because they invented the sport.
right, and we have college basketball tournaments going on. Did you hear
Yes.
what happened with the Big 12 tournament?
No.
They had put in a different floor. They had an LED glass floor so that they could change the floor for the different
Right.
teams.
Right.
And they ended up pulling it out overnight and going back to the traditional wood floor because the players were complaining about the traction or lack thereof on it.
Oh
And
wow.
I think a Texas Tech player was actually injured, pulled a muscle when he
Yikes.
slipped on it. So, yeah. All right. But alas, this is not a sports talk podcast.
No, we get
And
we get off
but
topic.
anybody who's listened to this for any more than like 1 or 2 episodes know that we always start out talking about something that has nothing to do with finance and
Right.
usually has to do with sports. Um, and the whole baseball segue was the title to this podcast is There's No Crying in Investing.
There's no crying in baseball. Little Tom Hanks. That's my
A little
best.
one of my favorite movies. One
Yes, A
of my
League of Their
favorite
Own.
movies. Yes.
So good. And I
Yes.
think the biggest surprise in that whole movie is Madonna's acting was
Yeah,
great in
she
that
she
movie.
could actually act in
Of
that
course,
movie.
Gina Davis is fantastic in everything she's
Always,
ever been in.
always.
She's one of my favorite actresses.
Well,
So,
and when you think about the caliber of that ensemble cast, it was just
well,
incredible.
Tom Hanks is the hard drinking manager.
And
Really
Rosie
funny.
O'Donnell is in it.
Rosie did a great job in that movie.
Yes, yes,
Yeah, her and Madonna made a great duo. They had a great chemistry in that movie.
they
But the
did.
movie, the subject matter, amazing. And the fact that it's based on a true story and real people,
Mhm.
amazing.
I think, you know, it just tugs at all my heartstrings in the right places. But something else that has been making people cry potentially the last few weeks with everything going on in the world is what's going on in the investment world.
Yes.
It has been a topsy-turvy couple of weeks. It's
Whew,
going to continue to be
that's
topsy-turvy.
an understatement.
Well, yeah. Um as much as I knew, anticipated, suspected that this was going to be a volatile year for the markets, it's a
Yeah.
midterm election year. All of these fun things going on are just making it that much more of an event to sit back, pop popcorn, and not trade your accounts on emotion.
Yeah, don't get emotional. And I always check the headlines every day, just to see.
Hmm.
And boy, the sky is definitely falling according to all the news sites. I mean, today CNBC, the headline was fourth quarter GBT revised down,
Yes.
low growth, core inflation is up, S&P 500 falls, heads for third straight losing week as the Iran war drags on. I mean, it's just like we're bombarded by it, and it's hard not to let our emotions go, oh my gosh, I got to do something. I'm going to lose money, right?
It's a good argument for turning off the news in the morning
Right.
and watching a rerun of something like the Burns and Allen show, preferably something in black and white when the world was a lot simpler and they're not
Right.
going to pull out a smartphone and they are not going to use a computer to fact check anything.
Yeah.
Let's go back to
Just
those simpler days. Let's watch Lucy and Desi drive from New York City to California and have them take 2 weeks to do it and go on all kinds of adventures in the meantime.
love that. Yeah.
Please. Um,
Watch the Carol Burnett show. Watch Tim
oh,
Conway
yes. Yeah.
accidentally inject himself with Novocaine
Yes.
or whatever it
Priceless.
is. Yeah.
Priceless. But again, we are rabbit trailing. Here's the thing.
Yes.
We have to remember that a lot of the trading going on that we are seeing is not done by humans. It is done by computers. It is done by algorithms that have been plugged in that are simply, if a stock hits this price, then buy, if this, then sell. And so the institutional investors are not using emotions to make trades.
Right.
And, how many times did we tell our kids it's okay to be angry? It's not okay to hit your friend, hit your teacher, all those things. Taking your emotions out of the moment and stepping back and looking at the situation for what it is can end up saving you costly mistakes. I was teaching one of my retirement ready classes last night and had a really fun crowd.
That's good.
Yes. And one of the people in there said, because we were talking about trading, and he's like, one of the best things I think I did for myself when the world got crazy was just to not look at my account.
Right. Yep. And because it depends on your situation. If you're working with a trusted financial services professional like yourself, Barb, if you
Right.
have a written plan, and especially if you have time on your side, if you're
Yes.
not yet in retirement or if you've got 20 years left of retirement, then you shouldn't. I mean, the market's going to have downturns. There's going to be corrections, like there was last April, but
Mhm.
you don't need to worry about it or lose sleep about it because you've got a plan in place, right?
Right. And that's why I have intentionally met with my clients and talked to my clients about the circumstances going on.
Sure.
I have used things like my newsletter to keep them updated and say, look, we're in for a bumpy ride here, folks. And more than anything, with using a third party money manager like Gradient Investments, I trust that their portfolio managers and their traders are far more aware of what's going on than even I am at my level, and that they are making changes to our clients' portfolios as needed to position them for the best opportunity for growth and to stay in line with what the vision for that portfolio is, and
Right.
not have the tail of the headlines wagging the dog of what your underlying investment is.
Right. Yeah, there you go. And that's the thing, because if you let emotions start dictating your financial decisions,
Mhm.
you almost lose every time, because then what you end up doing, and you've said it before, Barb, is correct me if I'm wrong, but people end up they sell low and they end up buying high or
Right,
missing out
because
on growth.
they get scared when they see a significant drop in the market, so
Right.
they immediately go in and trade their account after it's taken that depreciation, and they lock in that loss by trading it into something that's more conservative,
Hmm.
and then they get scared to re-enter into that investment they were in before until they see it recover, so they miss out on the opportunity for all of that potential growth.
Yes. Yes, and it's a massive potential for growth. In fact, if you're still in retirement, it's one thing, and that's why you need a plan to cover your expenses so you don't have to worry with market volatility. But in your
Right.
working years, corrections are good
Well,
because
they are. You're buying
downturns are
stuff
good,
on sale.
right? You're dollar cost averaging your way in, right?
Mhm.
And
Right.
what does that mean, Barb, to dollar cost average your way
That
in?
means that sometimes you're buying it at a higher price, sometimes you're buying it at a lower price. You're going to end up averaging usually at a price that comes in at or below what it's trending, but overall you're going to trend up.
Yes. Yeah, and that's huge. I mean, buying when the market down is good, but you can't you shouldn't try to time the market, which some people
No.
do.
No, and if you are in retirement and you are drawing off of these investments, I would hope that your advisor has a bucket of money that we are drawing off that cash flow gap for, that we are filling, that is in something that is conservative, something that is got a projected lower rate of return, but a lower volatility to it. So that if you have those other more aggressive, more growth focused investments, that when we're in a situation like we are right now where everything is correcting and a lot of stuff is pulling back, that we're giving those investments time to kind of ride this cycle out and take a breather and recover before we have to pull more from that bucket to replenish the bucket that we're pulling that cash flow gap out of.
Sure. Yeah, and that's interesting. You talk about buckets, and the bucket method is a good one because you do need certain buckets of money where you're pulling. It's actually you've said it before to me, Barb, that it's almost more important where and when you're
Mhm.
taking money out of those buckets or your accounts. Than it is how much you have. Some people have a lump sum in a 401k and they say, I've got this much. I should have enough,
Mhm.
right? Depends on how that money is going to be allocated and where you pull it from and when you need it, right?
Yeah, having a pile of money or having an investment does not mean that you have a plan. A plan means that we have money earmarked for what happens if you need long term care, what happens if you need a significant amount of cash that you have to grab for a home repair or to help a family member or something completely unexpected. What money do we have earmarked where we are being a little bit more aggressive so that it's growing and keeping pace with or ideally outpacing inflation? If you haven't taken the time to take that 401k or that amount of money that you have set aside for retirement and segment where it goes, then you don't have a plan. You have a pile of money.
Right. And you have to have a plan. And no matter how much or how little you have, it's important to have a plan
Right.
and to make sure you stick to the plan and work with a financial professional because you've probably had a lot of situations, Barb, where somebody may have seen something on the news and called you, hey, what about this? And had to, you talk them off the ledge and say, hey, you've got to hold out. And they could have made a costly mistake. And
They
that's what
really
you're there
could
for.
have. And in fact, I had somebody come into my office yesterday that was a referral from another client,
Sure.
and she has a very, very small savings and is a grandparent who is taking care of grandchildren, has full custody of grandchildren,
Oh, wow. Okay.
and had come responded to an unsolicited call
Mm.
and the recommendation that this agent was making was not at all suitable for her. And she called me because she's like, I just don't have peace about this. And I don't think it's the right thing to do. And we concurred with that. And we are helping her right the ship and make some choices that are more in line with who
Her
she
needs
is
and where she's
and what
at.
her risk is.
Yeah.
It breaks my heart that there are people out there that take advantage of others the way that
Especially seniors or somebody who's
yes,
taking care of grandchildren,
yes,
I mean, that's tough. And you do get a lot of bad advice. I mean, some people are taking financial advice from TikToks and from
exactly.
social media telling them, "Oh, do this." And the IRS had to just release the Dirty Dozen scams where advice that some of it isn't necessarily an outright scam, but it's just bad advice, like telling them, "Here's how you can get a bigger refund."
Or
Say this company, say you withheld, and
mhm,
make up a company and say you've I mean, telling them to break the law, and these people could end up in prison or
right,
hugely in debt because they're doing some workarounds that are illegal. And
right.
so you got to be careful about the advice you get, and
Well, and
especially
let's
financial.
spin that back around to investing, because right now with the pullback in the market and with the instability in the Middle East, you're going to start seeing a lot more advertisements for things about buying precious metals and moving all of your assets to
Yeah.
that.
Oh yeah.
I would say it's down, but still once a month, I end up fielding questions from a client about, I got this email that says that we're going to a cashless society, and that in order to protect what I have and for them not to take my IRA, we need to move it all into gold. So is that what we need to be doing? No, it's
Or
not what
somebody
you need
wants
to
to
be
sell
doing.
me physical gold and they'll
Mhm.
store it for me in a
Right.
locker. And there's scams out there, so many. I just talked to somebody who had a client that came to them and they had put $100,000 into physical gold, and then
Mhm.
the company disappeared, stopped
Disappear.
taking calls. The address was illegitimate. I mean, and the
Mhm.
FBI, because it was out of state, the FBI is even involved because there's
Right.
been so many complaints. But
But,
obviously, there's a
the
lot of stuff out there you got to watch out for. Don't let your emotions get carried
no,
away.
and the ne'er-do-wells right now are going to prey on your emotions,
Yes.
and they are going to capitalize on that moment of dysregulation and panic and put you in a place where you make a decision that sounds good in the moment, but really isn't based on anything factual or sound. Going beyond going into your 401k and freaking out when you're seeing it dip and moving it all to the money market and then waiting for everything to come back. Make sure that you are clear headed when you are making investment decisions. If you do not have a financial advisor, I want you to find a financial advisor, preferably one who is a fiduciary, who will answer your questions and help you figure out what's going on. Usually, some people are going to charge a fee to sit down and offer their advice. Others of us don't. But how you, the mindset that you are in when you make a decision can sometimes impact, not sometimes, if you're not in a good headspace, you're not making a quality decision.
Right. Yeah, yeah, give it a few days, or
Mhm.
immediately research it and do the due diligence. Pick up the phone, give a trusted financial advisor a call, a financial
Mhm.
services professional. Barb, I know you and your team there at
Yeah.
BG Wealth Advisors Advisory will help them with these things and help them with their questions. And you're offering a no charge
Right.
consultation or strategy session, so they can ask questions, get a second opinion on where they're at, or get a
Abs
first.
Absolutely, because the worst thing you can do for yourself is make an impulsive decision in a heightened emotional state.
Yeah, that could cost you. Oh, I got to move all to cash, or I got to buy
Yeah.
gold because the sky is falling. Well, slow down. Maybe some investment in precious metals, maybe increasing that might be right for you, but might not. So you've got
Yeah,
to look.
I
You
mean, at
need a
some
balance.
point, we have to figure out, we don't want the yucky people in the world are going to prey on this instability
Yeah.
and work on making you dysregulated emotionally and
Mhm.
making decisions that aren't necessarily in your best interest.
Right. Exactly. Well, and Barb, it's so important. You're right. There is no cry. There's no crying in investing. Wait, are you
Hopefully
crying?
not.
Are
No.
you crying? There's no crying in investing. Tom Hanks was great in that movie,
He
but
was fabulous in that movie.
yeah. So you're right. I mean, kind of a funny title, a nod to the movie, but it's true. Emotional financial decisions can really cost you in the long run a
They
lot.
can. They
Yeah.
can.
They could derail your retirement plans.
Or heaven forbid, if you fall prey to a scam,
Oh, yeah.
erase your retirement completely.
Right. And so don't make emotional decisions is really the name of the game, and that's the message for today, right?
Yep.
Yeah. Good show, Barb. And I think it's important now, once again, before we go, let our listeners know how they can set up that consultation, ask you questions. I know you love hearing from our listeners and viewers out there.
I do. I do. We always want you to go to our website, bgwealthmanagement.com. Or if you want to catch more episodes of this podcast, go to anchoryourretirement.com. You'll see an archive of podcasts there. And if you want to do this the old fashioned way and call us on the phone, you can call us at 913-553-6222.
All right. Well, thank you, Barb. And listeners and viewers, thanks for tuning in. That does it for today's episode of Anchor Your Retirement with our host, Barb Gullen.
We'll see you soon.